Hello, I'm Paul Herman of Herman Company, Certified Public Accountants. With all the excitement right now around the new tax bill, we thought it'd be an appropriate time to reach out to our clients and friends and address a couple of questions that they may have about the bill and the possible changes it may bring. So the first question is, what are likely to be the most significant changes to the tax code under the new bill? Well, the first major change under each version of the bill is the change in tax rates or tax brackets. The Senate's plan keeps the current 7 income tax brackets but lowers some of the tax rates. The House plan reduces the number of tax brackets to 4. The lowest bracket actually jumps to 12% from 10%. The top bracket would remain at the current 39.6%. It will, however, take more income to get into each succeeding bracket, in effect lowering taxes. The second major change relates to deductions. Both plans eliminate or limit important itemized deductions. As for property taxes, the Senate's bill eliminates the property tax deduction altogether, while the House bill would still allow individuals to deduct property taxes on their principal residence of up to $10,000. This is a big sticking point for both sides, the House and Senate, and it should be interesting to see how that issue plays out. Both plans eliminate the deductions for state and local taxes. This would be especially painful for people like us who live in high tax states such as New York. More on this in a moment. Both plans double the standard deduction for everyone. A single filer's standard deduction increases from $6,350 currently to $12,000. The deduction for married filing joint filers increases from $12,700 to $24,000. And finally, both plans double the estate tax exemption, and both plans eliminate the alternative minimum tax, or AMT. I think this is a major deal as the AMT generates a lot of tax revenue, and it also complicates tax planning. The final question, and probably the most important one to you, is how does this plan affect me? Well, as of now, there's a lot we don't know about how the bill will look if and when it is passed. What we do know is that the final bill is expected to be more beneficial to businesses rather than individual taxpayers. The authors of the bill believe that the most significant cuts to individuals are expected to go to the middle class, and they believe that will stimulate the economy as they feel that the middle class is more likely to spend the money that they receive with the new tax breaks. It's likely that New Yorkers will be hit the hardest by the bill, as deductions for mortgage interest and property taxes, as already discussed, will be limited or eliminated. Under the new bill, homeowners with high or large mortgages will only be able to deduct interest on the first $500,000 they've borrowed on their principal residence. New Yorkers who lose some deductions may get relief from the elimination of the AMT. Everybody's situation will be different. Because there are so many moving pieces, it's really tough to predict how exactly an individual's taxes will change. If and when things become more clear, we'd be happy to discuss how the tax changes will affect your situation. But for now, stay tuned. And you should do some year-end planning now to reduce your 2017 taxes under the current law. You can check out our tax planning letter on our website in preparation for the coming filing season.